Hi there, Mike Hall here. I'm the CEO here at Paul Fraser Collectibles. So as the year draws to a close, it's an inevitable time of year to reflect on what we've just been through in the past year. And it seems yet another year of crisis after crisis. It's got to the point now, even at home, a common family dinner conversation is predicting where the next crisis will come from, whether it will be another pandemic, devastation caused by climate change, or terrorism, or a whole host of other nasties that can have a real terrible impact on life. So you've got to think, well, what does this mean for the market for rare collectibles? Well, it's actually no surprise to me that this year I've been approached by more people than ever before that manage big money that are expressing an interest in the concept of investing in rare collectibles as a means of diversification and moving out of more volatile assets. And the reason for that is that rare collectibles have always showed their mettle in times of crisis. The most recent example where that was proven was in 2008. As everyone knows, most investments fell dramatically in value during that time. And that was a year when rare collectibles had one of its strongest years ever. For example, rare British stamps recorded 38% growth in that year. And the reason for that is that the market for rare collectibles, the pricing dynamics are driven by passion and a desire of ownership against the backdrop of an inevitable and inherent diminishing supply, whereas traditional investments are driven by greed and fear and therefore are more volatile. So if I look back over the past year, I'd say the key dynamic has been a rising number of high net worth individuals, particularly from Asia, entering the market, along with an increase, which has been a common trend for some time now, of people buying online, which has created a truly global marketplace for collectibles. So the market size of rare collectibles at the moment is around $500 billion. Now that is estimated to increase to surpass $1 trillion over the next 10 years. So there is an expectation out there that the market will continue to rise. Now, just giving you some on-the-ground experience that I've had over the past year, which leads me to predict what I expect to happen in the year ahead. I think there's five key dynamics I think that we'll see influencing the market for rare collectibles in 2024. Now, the first, I'd say, is inflation. Now, albeit that now appears to be under control, I think there is an acute awareness of the risk of inflation now, and that will lead to more people buying rare collectibles as a hedge against inflation. The reason for that being that rare collectibles have always performed the best in times of high inflation. The second factor I think we'll see is a rising number of people buying rare collectibles just for investment without any particular interest in the collecting concept, as I think there's going to be an increased desire in moving money into more stable assets that are less volatile and diversifying wealth. So in that vein, we're attending a number of investment seminars next year, predominantly in the US and the Far East, where I think there's huge untapped potential. So the other thing is that when I study auction realizations over the past year, there's one dynamic that stands out above all else, and that is that the highest value rarities in the finest quality have considerably outperformed, and I think that dynamic will continue going forward. But I do think poorer quality, more common collectibles will probably perform significantly poorer than the top of the market. This year, because we're still in this year, we launched for the first time our NFTs, which were inextricably linked to fractional ownership of rare collectibles. Now, our timing couldn't really have been much worse because the NFT market took a considerable dip this year. Most experts in that area, though, predict to see a significant recovery in the year ahead, and I expect to see that too. And that would lead to a rising number of younger buyers and new buyers into the market, and more collectibles getting taken out the market into these fractional ownership vehicles, which will put a lot of pressure on the prices of rare collectibles as they become scarcer. So, in that vein, my book recommendation for the year is Own a Fraction, Earn a Fortune. And it's written by Michael Fox-Rabinovich, who is a partner at Chartwell Capital, but he's also a major active investor in the collectible space. That will give you a really good insight into how the concept of fractional ownership could revolutionise the market for rare collectibles. The final dynamic I expect to see next year coming to play more is the impact of Asian buyers. Now, already a third of the sales at the two major auction houses of Sotheby's and Christie are to Asian buyers, and I think that will grow further next year as millennials in that demographic come into the market with an interest in rare collectibles. So these are the key dynamics I think will have an impact on the market next year. In the new year, I intend to film another video where I will share with you my hot tips in the market where I think there is room for considerable growth in the year ahead. So that just leaves me to wish you a happy and prosperous new year, and I look forward to speaking to you again in the new year. Thank you very much.